off. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices have all turned sharply lower, giving up earlier gains as the market attempted to rebound. And the drop comes after another hot inflation reading today. The Bureau of Labor Statistics Producer Price Index jumped 0.5% monthly in April and surged 11% year over year. That was in line with economist expectations on a monthly basis and was a slowdown from 11.5% annual inflation in March. It's the first decline in the rate of annual price changes since the pandemic started. Now, the core PPI, which excludes food, energy, and trade services, rose 0.6% monthly and 6.9% annually. That was also in line with economist expectations. Producer prices are a leading indicator for consumer prices, as those increases are eventually passed down to shoppers. Now, on the other economic data of the day today, weekly jobless claims rose unexpectedly last week. The Labor Department reporting 203,000 Americans filed initial claims for unemployment benefits. That was an increase of 1,000 from the previous week and missed economist expectations for 194,000. Now, the previous week was also revised higher to 202,000 from just 181,000 originally reported. That was the biggest weekly increase since July of 2021. Continuing claims did fall by 44,000 to 1.34 million in the week ending April 30th, which is the lowest level since early 1970. Now, oil prices are pairing earlier losses and turning higher in today's session. West Texas Intermediate crude futures up about 1.2% to around $107 per barrel. Brent crude futures rising less than 1% to about $108 per barrel. This comes despite fresh recession concerns in the U.S. The International Energy Agency did also warn on Thursday that soaring gas prices will hurt global oil demand. And U.S. gas prices did just hit a new record high. Data from AAA shows the national average for a gallon of regular gas is over $4.41. That's the third record set just this week. Diesel prices are also sitting at an all-time record over $5.55 per gallon. And the crypto market is trying to rebound. Bitcoin rising about 4% over the past hour, sitting around $29,500. That coin plunged below $27,000 early this morning, breaking that level for the first time since December 2020. Ethereum is also up about 4% in the past hour, rising back above 2,000. But the global crypto market cap is down more than 10% in the past 24 hours, sitting at $1.3 trillion. Investors have been fleeing crypto alongside stocks this week. And there is a bit of a suspicious meme stock rally underway. GameStop shares up about 14% after trading was previously halted in the session, with the stock surging as much as 30%. AMC shares also rising as much as 30% earlier today, currently trading about 14% higher. The action has not been prompted by any specific news, but rather seems to be traders taking advantage of major discounts on beaten down stocks. Now, meantime, the market is also digesting a few earnings reports, so let's take a look at those results. Disney shares falling more than 1% today after missing fiscal Q2 expectations, but reporting strong streaming subscriber growth. The company did report adjusted earnings of $1.08 per share on $19.25 billion in revenue. Now, that missed analyst expectations on the top and bottom line. But Disney Plus had 137.7 million total subscribers last quarter, beating expectations for 135 million. Now, that subscriber beat did initially boost the stock after the report was released Wednesday. Disney's theme parks business is also seeing a solid recovery from the pandemic. Theme parks and product sales nearly doubled year over year to $6.65 billion. Now, Beyond Meat shares have turned sharply higher in today's session despite reporting a wider than expected first quarter loss. The alternative meat company reported an adjusted loss of $1.58 per share on $109.5 million in revenue. That was worse than analyst expectations on the top and bottom line. Beyond Meat executives did warn of near-term uncertainty due to inflation, rising interest rates, and supply chain issues. The company did forecast full-year revenue between $560 million and $620 million. Now, WeWork shares are rallying about 15% today after reporting a narrower Q1 loss than expected. The office sharing company did report a loss of 57 cents per share on $765 million in revenue. That was a smaller loss than expected, but revenue did come in a bit shy of expectations. Sales, though, were still up 28% year over year. WeWork's total expenses also fell to $1.12 billion versus just over $2 billion a year ago. The company did forecast Q2 revenue between $800 million and $825 million, with full-year sales expected to fall between $3.4 billion and $3.5 billion. Now, Rivian shares are jumping more than 22% today after reporting a narrower first quarter loss than expected and a strong outlook. The electric automaker did report a loss of 43 cents per share on $95 million in revenue. That was narrower than Wall Street's estimates for the loss, but revenue did come in a bit short. Now, the stock is rallying, though, after Rivian did maintain its previous 2022 production guidance. The company still expects to deliver 25,000 vehicles this year after producing more than 2,500 in the first quarter. Rivian said it had more than 90,000 reservations at the end of Q1 and nearly $17 billion in cash. Now, Lordstown Motors shares are skyrocketing more than 50% today after successfully selling its Ohio factory to Taiwanese tech company Foxconn. Lordstown confirming that $230 million deal went through after hours on Wednesday. The two companies did also reach a manufacturing agreement for Lordstown's Endurance electric truck to still be built at the Ohio plant by Foxconn. Lordstown plans for production to start in Q3 with commercial deliveries in the fourth quarter. Foxconn took control of that factory effective immediately. Now, another company will also be building its electric car at the same factory. EV maker Fisker shares popping about 15% higher today after announcing that Foxconn will build its Pear EV sedan. Production on that car is expected to begin in 2024. They have a goal of building that out to 250,000 cars per year. And a long-awaited IPO is now in the works. Grocery delivery platform Instacart has announced it filed a draft registration statement with the SEC in its first step toward going public. Instacart previously raised $265 million in funding and was valued at $39 billion back in March of 2021. But the company did cut its own valuation to $24 billion this spring due to the sell-off in tech stocks. Let me know your thoughts on this IPO in the comments. Is it something you might be looking to buy into? I am personally a big fan of Instacart and I use it often for grocery delivery, but many analysts worry it's a pandemic-era fad. Tell me your thoughts and I'll see you back here for the Wall Report tomorrow.